Hello and welcome everybody. This is Chart Request Live. We do this show twice a week, every Tuesday and Thursday at 1 o'clock Eastern time right here on Stock Market TV. I am joined as usual, not always anymore, but as usual, by my esteemed co-host and friend, Patrick Dunawilla of the Chart Report. What's up, dude?
How are you, man? It's good to have you back. Alfonso did a great job stepping in, though.
I knew he would. I think we're gonna sprinkle in more analyst team love in the future. We're all busy out here. We're only getting busier. As much as I would love to come on here and just chart for an hour twice a week, I don't know. I don't know. Maybe we add a third day of the week for Chart Request Live. I really don't know. I have
Hey,
more
now.
questions than answers,
I
but
like it.
I will say yesterday was different. Yesterday just felt a little different. Shouldn't we talk about it?
Yeah, let's talk about it.
Let's talk a little bit
It was
about
a,
the
it was a nasty day. Last week I kept hearing it had been like, centuries since we had a 2% decline, and they jinxed it because we had one.
So this is
But
this, yep. So this is what Pat's talking about. Let's just look at the declining days here.
yeah,
So this is I'm just doing XLK. Look, it was mega cap growth. It was the AI trade. It was the leaders. It was the best stocks.
yeah, the Mag 7. Yep.
Hardcore profit taking is what I would call that.
Yeah, I mean, Steve, a third of the index closed higher.
It's incredible.
So, I mean, it really was a lot of the mega caps.
So his point is, it wasn't like a nasty declining day. A lot of times big sell-offs like this, you're looking at, declining ratio of like 90%. Wasn't that at all. It was 60 something percent, right?
That's why it was a weird day. Yeah.
Big ones, the heavyweights were getting slammed. The AI trade is really cooling off. Is that
Yeah.
fair?
Yeah, because it's so strong that it's got to correct at some point. And I think, it's too early to say it's over and that it's correcting it's counter trend or a trend reversal. I think this is kind of just, a normal correction within an uptrend at this point. But
Yeah.
yeah,
The last day, the NASDAQ 100 or XLK, I'm sorry, I said this was a XLK. This is the NASDAQ 100. The last time we had a daily sell-off this bad was October 10th, 2022, just before the bear market lows
yeah.
for most indexes. So it's something to be aware of. It's something to keep an eye on. I still think you don't want to throw out your tech stocks, but I do think that you want to prepare yourself for an environment where they're no longer the only game in town. And frankly, they're probably not even the best game in town anymore, right?
Yeah.
Because I think a lot of us have done really well in the market this cycle by being grossly overweight the best stocks. I don't think that same game plan is what we want to take into the second half of this bull market.
Yeah, for the longest time, the narrative was, or the complaint was, the concern was that the mega cap strength was making or was covering up for the broader weakness under the surface. And now you have the exact opposite, where you have the mega cap weakness is covering up the broader or the broadening strength. Of course, that broadening strength, the rest of the team hasn't been enough to offset what's going on with those mega caps.
Yeah.
But I think if you had a scenario where the mega caps were correcting and the broader market was still weak and you didn't see the rotation into other areas, that would be a really bad scenario. And you're not seeing that yet. So
100%. So get ready for the news, just like they complained last year that the market was too thin. It's only a handful of stocks. Now they're going to say the leaders aren't working. Generals, right?
Right.
How can this bull run carry on without the AI names? Right? That's what you'll probably hear soon. Another thing before we move on and hit the mailbag in the chat, look at these wicks here today. This was some big selling for the past few weeks now, and this is what a turnaround candle should look like. RSI and a lot of names oversold or close to oversold in tech. This is the MGK, the Mega Cap Growth Index. RSI down here around 40, and this is what we're getting today. A big intraday reversal. It's turnaround Thursday today, baby.
I bet if you change that to a 50-day, I bet that'd come in right where we are. Because I know in the S&P, we're pretty much right there at the 50-day is where this support's happening. So, okay, so a little bit below, but look what happened in April there. We kind of traded below there for a minute, and then there you go.
Like this is the kind of candles we're seeing. Like, look at this wick in AMD.
But as uncomfortable as this little pullback has felt, I mean, can you believe we're not even really below the 50 that much? Like we're pretty much just at the 50. Like that's pretty normal, right?
I think you look for like the first sign of stability in some of these names that have been sold hard, and you look to sell the puts, man, because I just it's with the way the rest of the market is clicking, is really just like things are really coming together for the broader market. We think the best ones are going to complete tops, right? Like something like Micron. Like I would bet against these patterns completing all day,
Yeah.
right?
Yeah.
So I think we'll be talking more about that probably next week. All right,
I
let's hit.
like it. Okay, so the first one, we're starting with a little bit of a conceptual question here, but I think it's important because you and I have been talking about these non-tops a lot, right? These failed tops, as I like to call them. Um, you always say they're tops that aren't tops. But anyway, Mark asked, I'm confused about these double rounded tops labeled as a top that isn't a top. Can these be confused with double tops that in TA parlance might imply a trend reversal?
What's the
So
tick he's asking about?
so he's not really asking about a ticker. He's more just asking about these tops that we keep talking about that aren't tops. So do you want to talk about non-tops? And he's kind of asking how they're different from a double top.
There's no difference. A top and a double top is the same thing. Double top is kind of bullshit because typically the trigger level is really far away, and they're not patterns that are really used in practice in the real world. They look good in textbooks. So let's mark up like a DR Horton.
Well,
Or
and also like, you and I really never identify double tops because we're looking for something similar, but we just don't call it that. Like a fail breakout in a
listen,
lot of ways is a double top.
I,
Um,
there are tops, there are bottoms, and those are reversal patterns, right? And then there are continuation patterns. We
yeah.
can go crazy like Pat. Another thing we don't do is call everything under the sun head and shoulders, right? That's
Mhm.
just top, right? So there's really two patterns in this world: continuation patterns and reversal patterns. The top is a reversal pattern, whether it's a double top, a head and shoulders top, it's a reversal pattern. By nature, reversal patterns are more likely every time are more likely to fail than to complete. I'll say that again. Any reversal pattern, let's just draw one out here, that you see shaping up, if it's a reversal pattern, it's probably going to fail, not complete. Why am I?
Yeah, and one of the most consistent and kind of trustworthy chart patterns out there is the failed head and top, to your point. Like it's not the head and shoulders top, it's the failure of it is one of the more powerful patterns out there.
And that's because trends persist. The reason why tops tend to fail is because the underlying trend tends to persist. And if the top were to complete, that means that the underlying trend is reversing. So something like DR Horton, I don't have to zoom out very far. These were the lows from last fall. We rallied from $100 all the way up to 165. That's a 65% rally. And then people are starting to draw it like this and getting all bearish after a 65% rally in the middle of a raging bull market. They want to draw tops like this. And we look at this pattern and we zoom out and we say, okay, where did it come from? Oh, wow, look at this beautiful uptrend, right? Slow and steady. This wasn't a top either, right? And we look at it and we lean into the underlying trend, right? And we say, okay, yeah, I see this shape here, but that's a reversal pattern. Odds are it's going to be a continuation pattern and the underlying trend is going to persist. And then all we do is we pick our spots. Right? We try to identify logical levels and to get involved in responsible ways to manage our risk and play the setup. And something like DHI, we had the shake, which we love. You look at RSI, right? Momentum never got oversold. So all of the, indicators, all the momentum indicators are telling us this is probably still a bull market, right? We're not getting oversold. That's bull market stuff, uptrend stuff. So we're thinking to ourselves, as this looks like it's completing a top, we're looking at momentum. We're saying it's probably not a top. Look at momentum, right? That's pretty good. Then we look at the intermarket, right? And we look at other groups, other pro-cyclical groups. Oh, the banks are ripping, right? Oh, small caps are working. Look, breadth is expanding. You're going to say, okay, so home builders, maybe the second strongest industry group, this entire bull market, they're going to just reverse and stop participating in the bull market when all these other groups are starting to participate, right? So you take away to the evidence, you look at it and you say, that's probably not a top. You get long. And the way you would manage risk in something like this, we're always dropping the VWAP from the range high for confirmation. You got that literally right away on the little failed move into breakaway gap kind of situation here. And then we run right back up to and through the upper bounds, and now we're flagging there. So we can draw these patterns over and over and over again in different areas. If I can just throw out one that's printing right now.
You know, Steve, it sounds like you're really taking into account the environment, right? And that's why you're looking for these. Like I heard Alfonso, I haven't heard you say this, but Alfonso said you said this is kind of the year for the failed top, right? Last year was the year of base building. This
The
year,
rounding bottom.
yeah. So it's like we're in that stage of the bull market where tops shouldn't be tops, right? We should be questioning them, right? Because it's at that stage where things are, we've been in it for a little bit, but we're not quite mature yet. So would you be looking at this? Would you be looking for these patterns in year 4 of a bull market? You know,
it's such a good question. And you're right. And every cycle is different, right? Some cycles are abbreviated. Other cycles are extended. I'm leaning, and I'm not going to rely too much on my crazy brain, but I'm leaning in the direction that this is likely to be an extended cycle. It's secular. We got the AI stuff, commodity super cycle. Things are good. That's where I'm leaning. Rates maybe peaked and are now coming down. Everything sounds good for all that, right? And you're right. The stage of the cycle matters so much. I'm sitting here thinking we just got a breath thrust last October. Are we really going to start topping out? Are the best groups going to stop working? To me, we're in the middle innings of this bull market. I think certain areas like small caps are probably earlier innings, and other areas like AI stocks are probably closer to later innings, right? But the overall market, we're somewhere in the middle. So in the middle, you want to look for continuation patterns. Like we said, 2022 and 2023, that was the year of the rounding bottom. We had been killed in 2022. Everything, all these nasty drawdowns. It was an ugly bear market. We're looking for a reversal at that point. We got the reversals in 23, and now we have to, measure out the bull market, kind of try to estimate where we are in it. Like I said, I think we're in the middle. You don't want to be looking for tops yet. You want to be looking for continuation. I think maybe 2025 or 2026 will be the year of the valid top. But here's the thing. I haven't seen one valid top yet this year. Nothing significant has topped out, right? So as long as that remains the case, it's like making a list. We talked about software tops earlier in the year, right? They weren't tops. We did with all the tech.
Semis actually were the first back in October when NVIDIA had the head and shoulders top heard around the world. That wasn't.
So what you do
and
is
that kicked off another double. So.
That's absolutely right. So what you do is you start to make a list, right? You say if software was a failed top, if semiconductors were a failed top, if this one was a failed top. I'm even forgetting now all the failed tops that I've talked about this year. But then you look at something like home builders and you said that's probably a failed top too, right? And there will come a time next year, the year after, where things are actually valid tops. And we could start building a list of valid tops. And then we'll be saying the opposite. Well, if that was a top and that was a top, then maybe this is a top. Right now, it's the complete opposite.
Right. Very, very good point. And I think just last point, I think the fact that NVIDIA pulled that failed head and shoulders probably meant that we should be looking at that for home builders and other areas. So anyway, let's go into FCX. This has been a hot one this week.
Love it. This is probably not a top, guys. You can go see my Twitter if you really want to see what I'm thinking about this. I could probably zoom out even more on this one to make my point. A little oversold reading. Never hurt.
Just some context from Johnny here. I see a level around 43. Is it a sell if it breaks? Can I build a larger position here?
I would listen. You don't want to go crazy here, right? You want to get aggressive. I entered a position here the other day, super tactical, right here Monday, right? So this one moved against me a little bit. You don't want to freak out. Sometimes you do get a big shake, right? Some could argue, well, it was a top and then the target's hit. I don't think so, right? Is this the one we talked about, Pat? So $8 of downside is really for the target to be hit. This one probably just scoops and scores and shakes its way higher from here. So if you do want to start a position, you're right. You have the pivot high from December here, right around 43. Absolutely, right? And it looks like price is respecting that level now, right? Finding some sort of tradable low. Also, earnings is behind this one, right? So that's important. And then you want to wedge this in with some range high and range low VWAPs, right? So I'm going to use the low from October. That was a key low. Q4 low last year, right before the market started thrusting higher. That VWAP comes in literally right at the current price. That's one way to use confirmation. I would say maybe build half your position above this VWAP from the Q4 low, and then finish your position on a scoop back above the pivot lows here at about 47, right? And then from there, I think you're off to the races, and your target wants to be up here around 55, right? But we have all these different tools to allow us to scale in to positions like this, right? Because I think this one scoops and scores, right? I think it scoops higher. However, looking at this chart right now, that's not what's going on, right? So for this, you really don't want to finish off a full position until we're back above 47. That's the moment where the top really fails. And then I think you get confirmation that that top fails. A lot of people will use the right shoulder high, right? Or the last peak. The VWAP off the highs of the range probably works a lot better. So that's where you get confirmation that's really a failed top.
I like it. I like it. You know, copper almost reminds me of gold. You know, you had this beautiful long-term base that broke out and then it failed.
And Pat, here's why I like these copper stocks so much. And I'll just say, look, FCX is going to give you more juice.
Ooh, that's just as clean.
There's a more liquid options market. This one's cleaner. SCCO has been stronger. This is the leader. It's stronger. It's cleaner. We're right there. This top is failing like as we speak. Look at momentum. That's a little different than Freeport too, right? So I'm long this one as well. And here's why I like these copper stocks so much. They're failing tops, right? Something like Southern Copper is failing a top. Copper futures are more oversold.
What is that, 10 days in a row?
Copper futures are more oversold than they've been since July of 2022. This was a nasty sell-off in copper, right? Yet copper stocks who do business in selling copper, right, and they do better when copper prices are higher, they couldn't complete valid tops with copper selling off like this, right? And copper is going to probably find some sort of tradable low here. And
I mean, this $4 level is pretty important support, and here we are.
That's a good example of how like the inner market comes into the thinking about, you know, trading these failed tops, right? You're looking at a failed top, or you're looking at a potential top in something like Southern Copper, and you're saying, well, you know, if copper plunges from here, that's probably going to be a top. And then you look at copper and say, copper hasn't been this oversold in 2 years. It's due for a bounce here. Well, if copper bounces, we don't know what that bounce looks like, but what does Southern Copper Co. look like when copper's bouncing? That top's failing.
Yeah. I like it. Great breakdown there. Let's do Google. 1 year hold.
Yeah. Listen, I don't like it when they sell good reports. Google is such a monster. The report was so good. I love the report, but I don't care as much about the report as I care about the reaction. The market determines if a stock beats or misses. So I know everybody's telling us that Google beat the other day. They missed. Stock was down, what, 4-something%? Maybe helped spark this big sell-off in the entire mega cap growth space. Seriously, right? Yeah. So I don't love the reaction to what, you know, I'm not some fundamental expert, but I do know my way around financial statements. I looked at that report. I said, God damn, this company is just so good. They made $1 billion in interest income in the quarter. They're like a bank. I mean, this company is such a cash cow. It's incredible. You don't want to see the market stop rewarding these leaders for excellent reports, right? That's late cycle stuff. So with Google, I'm seeing some late cycle action off of earnings. However, I do think this sell-off in tech now is kind of overdone.
Yeah, and Steve, I'm pretty sure we hit the target on this one. I'm pretty sure this hit its 161, and here we are.
Google hit our target, and we were pounding the table for our hot corner customers over the past few weeks. Target hit. Pat, it looks like the Qs, it looks like the SPY, it looks like a lot of things, right? It hit the Fibonacci. Let them dance now. Google could be sideways for the next 2 quarters, and that wouldn't be crazy or really negative.
Do you think we violate the breakout?
I think I'm seeing a bit of a change in character in the way that they're selling tech stocks since the CPI print.
Interesting.
When was that? Character.
When was that?
What?
When was that?
CPI was 2 Fridays ago now, right?
Interesting.
So, I mean, here you go. For something tactical, I say let them dance. I think tech bounces back in a big way probably tomorrow over the next few sessions. But let this thing find some sort of a tradable low. Here are 2 spots that make sense, right? This is from the last earnings gap up from April. You could draw that right around low 170s, call 172. And then, if this gap is to fill, then we're coming back down here into the low 160s. That might be the best entry, right?
Yeah.
Let's see. But I think for now, you get some sort of bounce off this level. I wouldn't let it fool you. I don't think that means new all-time highs are coming, right away. But I think Google needs some time. I think a lot of these tech stocks need some time. They need to digest. They need to consolidate a little bit, give us a nice coil. Talk to me in 3 months when there's a sweet little triangle or continuation pattern here. We'll be buying that all day then, right?
I like it. I like it. Let's do BKR.
Baker Hughes, isn't this the GE Energy?
BKR?
Yeah, I believe something happened here and they took their name, right?
Did they?
I think so.
I thought GE Energy was GEV.
That's GE Verona or whatever. That's a utility.
Yeah, Vernova.
Vernova's a utility. I don't know. You guys could figure this out in the Google, but I think something like that happened with Baker Hughes and GE back in the day. So anyway, this is one of the larger oil services companies. I think oil services are very interesting right now. I think they will have their moment. I think E&P stocks will have their moment again soon as well. But for now, there's really nothing to do here.
Oh, man. Steve, you're right. I just went to their website. It's Baker Hughes, a GE company.
Oh, I know. So you got the 62% coming in here, Pat, right?
Yep.
So let's draw this nice and thick. We're above 62%. I think we eventually retrace and we get back to these 2014 highs. Wow, decade ago. This one made a high around 53. So we could do a couple things here. We're going to be above any of the VWAPs from the range. Probably going to be above the VWAP from the old all-time high. Yep. So this is working. You have some sort of like sweet coil here that you could draw in different ways. A lot of energy companies have been ranging in rectangles. This is more of a triangle, but it's the same story as Exxon or any other ones, right? Massive move off of the pandemic lows, and then a couple years now of just digestion. I think these stocks all eventually break out, and there's a time where we're going to be on here, Pat, and all we want to talk about is energy stocks, right? Because these rates are resolving, but it's not yet. It's not happening. In fact, you look at energy futures, and it's like, I don't know. Maybe these ranges resolve lower. So I think we need time. They need to continue to dance. The best ones will resolve their ranges first, and we'll start to see the writing on the wall, right? Just like anything else, we'll start to build a list. Hey, the early energy leaders are resolving these ranges higher. Maybe Baker Hughes is next. Those are the things we'll be saying when we want to buy energy stocks again. And I think we'll want Baker Hughes anywhere above either the 36 level all the way up to 39 here. I think you want to scale into something like this because it's a longer term consolidation. And then from there, we'll be looking back to those old all-time highs around 53. Again, I don't think this is a name that you need to rush into right here, right now. Let's see energy stocks trade like the banks or the biotechs or the home builders traded recently, right? Let's see some sort of momentum surge as the leaders come out of these ranges, right? You'll know when it happens. That's what I want from energy. Some sort of an initiation move, some sort of momentum coming into these names. Relative strength, that hasn't been there for a long time. So I think there's still a lot of work to do.
I like it. We got two more in mailbag and then we can hit the chat. Let's do Klaviyo next. This one's from Alex, KVYO, recent IPO that has not performed well. Looks like it formed a base and reclaimed the year-to-date VWAP, looking for a 12 to 24 month time frame.
Good buddy of mine works here
and
was at the stock exchange ringing the bell when they
with Klaviyo or
yeah, you know how the company goes up on stage and rings the bell when they IPO or whatever. So here it is, dude. Whoever's looking at this one's probably got this VWAP dropped right here.
He said a year-to-date VWAP, so.
Well, look, a chart like this, you drop this VWAP at the IPO day.
I would agree with that. Yeah, for sure.
You look at the whole.
I mean, look how many times it's come into play too, even today.
Yeah. So the Jan 1 is always a good VWAP too. I don't use it as much as Brian does.
I don't either, but
I really don't. I would rather.
But it would make sense why it's important, right? Like
fund managers.
Yeah,
right?
exactly.
It's the big money's using it. So yeah, I mean, look, you want this VWAP back. You want to buy strength above the IPO day VWAP.
When you're there, I mean, you could take it out even today if you wanted to.
That's absolutely right. Yeah. So this is probably happening imminently. And then I think you trade it back up to the 62%. You ignore this 38. 32.50. From there, 39.50. But the more important takeaway about something like this is that some sort of a trend reversal is shaping up here, right? What we always want to say about the stocks that, we're putting long positions on is that the path of least resistance is higher. And for us to have conviction that the path of least resistance is higher, we want to know that the primary trend is pointing up. I think once this base completes here and we reclaim this VWAP, we could start to say the primary trend is higher for this one. You can see the 200-day moving average just coming into play. It's right here. We don't have enough history for a 200-day quite yet, but it's trying to flatten, and it will once we reclaim this VWAP and start moving towards the 62%. So
I like it.
Let's call it 27, Pat, confirmation maybe at 28, at the 38%.
This one's almost in that base building phase that most things were in last year, right?
Yeah, like give it time. It's not uncommon to see false starts here, right? Maybe we overshoot the VWAP, hit the 38%, come back down, fall back into the box, right? Like that kind of stuff is normal in the base building process. So give it time, maybe scale in, but this one's shaping up nicely. IPOs usually have this, year-long phase of you don't want to be involved, right? So we wait for the price memory to come in.
Even the best ones too. I always use Facebook as an example where, how many times does a company go public and you get your calls from your buddy who you went to high school with and they're like, oh, should I buy Eventbrite or whatever it is? And so many times I just tell them Facebook is an example. It's like, there's one of the best companies out there that went public in the last decade. You could have bought them on sale for 50% off or 60% off within the first 6 months. So just wait, wait till the hype kind of goes down if you really wanted to buy it.
Don't run out and buy new IPOs. It's usually a good idea. Like you could hit a home run that way and pick the right one. Sure, it happens, right? Like everybody's gonna be like, oh, well, look at ARM or something like that. Yeah, they happen. But the rule is, no, you're gonna get railroaded if you buy something on the first day when IPOs. Look, if you did that with Maple Bear. This is the Instacart. One of my.
In a lot of ways, you are the exit liquidity, right? By doing that, it's like
companies used to IPO for different reasons.
Right. They used to raise money. Now they're just doing it to
now they're doing it because
their ridiculous valuations into cash.
Because the people who ran those companies for the last 10 years still haven't been paid.
Right.
This is a new Silicon Valley, tech startup .com bubble phenomenon.
We'll make you feel good about your valuation in the private market, and then we'll let you deal with it in the public market.
But look, Pat, shout out Instacart. I'm really interested in getting involved in this one. I'm scaling in this week here.
Well, hey, man, you're a power user too.
When I complain that like my bananas are bruised or something, it's no questions asked. It's just like they're just firing credits back to my account. I tell my girlfriend, I'm like, don't abuse that. Let's complaining about things, but no, they're great. I think it's great business. So,
man,
what do we got next?
We got wavies, and then we can hit the chat. So be sure to drop them in. Wavy wants to look at OII.
Of course,
what should my next target be?
Engineering, something funky.
Yeah,
I remember this one well. It's having a good day here today. I love it.
Is it? Ooh,
earnings last night. Oh, I love it when they miss and beat at the same time. So what do I mean by that one? What do I mean by that is that this one missed, right? They reported 28 cents. The street was at 32. So that's a decent size miss on the bottom line. They beat on the top line, which I promise you is always more important than the bottom. You got to beat on the top to beat on the bottom a lot of the
time. I've heard you get into this argument with people before.
Because it's a dumb argument. So people who try to argue that with me, I do feel strongly.
I know you feel passionately about it. Yeah.
You look at an income statement, right? If there's no top line, there's literally by definition no bottom line. Like one comes before the other, one drives the other. So you could do all the accounting tricks in the world to juice that bottom line, but at a certain point, if the top line isn't moving in the right direction, there's only so much trickery you could do with the bottom line. So the bottom line is manipulated. We use creative accounting to beat earnings all the time in corporate America. It's very easy to do. It's not even illegal most of the time. Pat mentioned channel stuffing, talking about Tesla the other day. They're just things that are just standard practice that you can do to the bottom line, you can't do the top. So the top you could trust more, and you need it for the bottom. 10 times more important. Love to see a top line beat, bottom line miss, and the market is agreeing with me. Bottom line don't matter. Up 10% here today. Love it when a stock comes out and misses and rips.
What's the message there? Is it basically like we don't care that you're maybe you haven't figured out how to be efficient yet, but you're pulling in cash flow and that's important.
Think about it. Amazon. They have earnings forever. A lot of these, growth companies, they come out. There's no earnings. It's all about top line. Top line is all investors care about, right?
I see.
Because they know if you could keep growing that top line consistently, eventually we'll bring in somebody
You can
who's
figure it out. Yeah.
Yeah, you bring in an operational expert, and then he figures out how to make the most of that top line drop to the bottom line. But that's like 5-10 years in thinking a lot of times with these startup companies. So OII looks fantastic. The sentiment is also so good. You zoom out, you got a monster base here. I remember trading this one early in my career.
What do you mean by sentiment?
The earnings sentiment. The fact that
I see what you mean.
They missed on the bottom, but the market's rewarding them 11%. This is a mixed report for us, right? If you beat on one and miss on the other, it's mixed. So this was a mixed report, not a flat out miss, but the market is saying, no, this was a beat, right? They'll figure out the earnings stuff. The revenue growth is there. That's what we need for earnings growth, right? They'll figure out the bottom line stuff. So the market's giving them a pass. I love to see that. I think you played this one pretty simply here. I'm going to flip it to a weekly because I know Wavy's got a longer time frame with his big bases, and I love that. I think we could fib this out, and it might give us something here. Ooh, not quite. Maybe a first target. Look, I think you could trade this one from 27 here to the first fib, but I really want 55 or more from this, right? I think you could find some logical levels, right, where we got some price memory back here from, I don't know, 15 years ago, right? You could pick your spots. But I think 34 is a little too soon. This little price memory cluster comes in around 42. You can measure out the base too, right, Wavy? I know you know how to do that. You could call this base maybe, measure it from 28 down to 2, tack on 26. I think you want like 50 or more out of this one. So the 62% around 55, I think that works, right? And this would be an example, Pat, of one of those that's moving early, right? Most energy stocks aren't making new cycle highs right now. OII is. So I like this one a lot, and I will be putting it on my watch list. Thank you, Wavy.
Dude, I gotta say, this company sounds pretty cool. They make like underground
robots.
Underwater robots, yeah.
Yep. So
is that for like pipelines and stuff like that? Like, because it kind of looks like an energy stock. That's why I was looking.
My buddy is an underwater diver. He dives on.
I just met somebody who does that, an underwater welder. Yeah.
I golf with him a couple times a week. When he's not golfing, he's like under the water, like fighting sharks to like fix oil leaks. But they employ a very high degree of technology in their jobs. So underwater robots, underwater helpers, software that helps them like figure out what to do and be safer under there. But yeah, it's really cool. It's super cool.
All right, now we can hit the chat. Let's start with Donovan. I know you're familiar with this one. Sprouts Farmers Market.
Ooh.
I got earnings in 4 days, Steve.
It's a goodie. It's a goodie.
Oh, what a beautiful base, too, that was. That was such a nice trade.
Did you get involved?
Yeah, got involved in this one. This is Alfonso and I were talking about it last week. We call these IPO bases, right? Where it kind of breaks that first IPO high, and then it just goes. Like Uber was kind of like that. We looked at one last week, VERX. That was a good one.
I feel like this base broke out yesterday, and
and here we are. Yeah.
Wow. I mean, when you see these patterns in the wild, guys, you just buy them. Like if you have a long enough time frame to allow you to make money in the easiest way in the market, which is by riding primary trends, then you see these patterns and you just buy them. Like don't even.
Yeah. Steve, look at VERX. Somebody from the chat brought that one in last week. Just real quick. I'm
aware of it. This is
you saw that one. Yeah.
It's going. So we've been talking
about similar kind of thing though, right? You see what I mean?
You just buy it, but the longer the better. Like so VERX, this makes sense, but honestly, these bases are everywhere right now.
Well, and you know what the big catalyst with Sprouts was? Dude, that thing had like 20% short interest when it was breaking out of that base.
I remember. It was
like, I remember like double checking it and being like, wait, is that right? Why is short interest so high? This chart looks amazing.
We wrote about it. We covered it on a couple of the different scans. Yet I didn't buy it because it just sometimes they move so fast and you feel like you missed it, and then you look back and you're like, wow. But you're right, it had a massive short interest. I think that's probably come in a lot. This one you want as close to 72 as possible. Your next stop based on the fibs will be 108. But I think you drill into a daily here and you just draw out this little continuation. So here's what we have.
And again, we got earnings in 4 days, so
You know, something like this, it's probably the catalyst to blow it higher. I don't think you want to be afraid of earnings in bull markets. It's listen, it's a tough call and everybody's different. You got to trade whatever style works for you, but you're probably in bull markets more likely to get surprises in your direction than in the opposite direction. So the big wins from earnings should more than outweigh the big losers from earnings in bull markets. I think this, you could call this a rising wedge, or you can say, hey, this is a sideways continuation since May. Now we're above any VWAP from here, right? You want to drop VWAPs all around the range highs here, right? And maybe use this VWAP from just last week or the week before, a reclaim of that. Okay, we can get long, and then we're on our way to the next fib, which doesn't come in until 108.
yeah, so it looks like it broke out in February and short interest was 15% now. It's still 10% pretty much, just under 10%, like
Wow.
9 something. So
Solid short interest.
yeah.
And then
Interesting.
and Pat, if they miss earnings, right, then you play it back down to this zone here, where you have a gap zone and the 161 coming in from the last earnings report breakaway gap, right?
Oh,
So
that's a good point, right?
low 70s, you could build a position there
Right.
and watch this not be a top.
All righty. Let's go to ATI, 6-month time frame.
Yeah. So, you know, I would expect these stocks to work better in the future. Isn't this the Allegheny Technologies?
Yeah.
Right.
Was it steel or?
This is commodity stuff, right? Base metals, industrial metals. ATI looking good here. Big old base. Let's flip it to a weekly because I don't think we're at all-time highs. No. But look at this. Who remember? Pat, you remember 1997?
Man, I was still wet in the bed.
So we're back there now. We're back there to the 1997 cycle high. This one has been around forever. If we fib it out, it doesn't really give me much here. So let's ignore that. This one to me is simple. It's a monster-based breakout. This is for people with longer time frames. Right? You scale in literally right here, more or less on strength. Oops. You want to scale in. You want to scale in right here. Scale in right here, 65, right? If it's making a new cycle high, you want to be in, and you get confirmation here at this April 2011 high. I mean, we're zooming way out. I'm sorry, guys. What is going on with my trading view? All right, this is going to be the last one, Pat. I don't know what's going on.
Okay.
Somebody else on the analyst team is using my trading view while I'm trying to do live video. So if we're above 65, 72, we want to be long towards 117. Gene, you could take the charts off the screen. We're done, Pat.
What was it? What was the levels?
If we're above 65 to 72-ish, right, that's where I would scale in, build a position, and then you could pay yourself and take profits at the all-time highs because it'll probably take some time to get through there. That happens around 118. So it's almost double from here to complete this base and make a new all-time high. I think we should be thinking more about commodity stocks. I think that's the right pond to be looking in. Like I said, energy, probably not ready. Copper, I think very tradable here. Maybe that leads to some sort of range resolution. I think commodity stocks have their time again soon. We just need to see it. But I think we should be prepared to enter an environment where things like energy, materials, the Alleghenies of the world, or the new cores of the Steel Dynamics are all working better. The ocean engineering, whatever, OII.
Oceaneering, yeah. The underwater robots. You want to try to hit a couple more, and if we have the problem again, we can.
No.
Okay.
Because I don't know if somebody needs the program. So, any closing thoughts from you?
Oh man, trying to think of my favorite chart here so far. I don't know if I have one that screams at me. This ATI looks nice, you know. But yeah, did you have anything that really stood out to you?
ATI looks really good.
I can read to you
Farmers market is really good.
What about that Clavio?
Vertex is yours. Clavio's not quite ready for me. I like the OII. I like the OII more than anything because it's breaking out on a mixed
Oh, you're
earnings
right.
report. It's
You're
breaking
right.
out in a monster way.
And
Like
earnings are out of the way. How nice is that?
earnings are behind it. It looks as good as anything in energy right now, right? Go count down the line how many energy stocks, and mind you, there's a lot of energy stocks. How many energy stocks are at new cycle highs? Not a lot. OII is now one of them, so we have to call it a leader. I think that's a great vehicle to play an eventual, new leg up from energy.
Yep. Well, Steve, I'll just read to you some of the tickers we didn't get to, and maybe you have some thoughts on them. HIMS, we got Morgan Stanley. Um, he says down pretty big on MS 110s for August. Hold, my stomach hurts. Um,
Who? Wait, MS 110s for August. We put leaps on MS. So I can't talk about options contracts that we don't write about. We put leaps on Morgan Stanley. We gave ourselves like 18 months for this trade to work for a
were they
reason.
the 110s?
Yeah, they're 110s, but
And then Cash, have you heard about that one? CASH.
yep, people keep asking about that one. It's like pawn shop. Morgan Stanley looks
Is it?
fantastic. Looks as good as anything. Cash looks great. Or it's like
This?
savings and loan. We talked
Oh,
about
right, right. Yeah.
look, you're getting the breakout in cash. It looks good. Morgan Stanley looks as good as anything. You zoom out on a chart of Morgan Stanley, it might be like the best looking base in the entire market right now, right? So if you only went out to August, I'm sorry, but I don't know why you do that. And then HIMS looks like it's gearing up and getting ready.
Right.
But this look, the HIMS is a tough one.
I think this one's got to shake out some weak hands if it's going to work, you know? I mean, people are excited about this breakout. I can't tell you how many times I've seen this set up somewhere.
Pat, you said it. And that for me, that's like alarm bells in my mind. Like when everybody's asking about something, I'm like, okay, this trade's over for a while.
Yeah.
So HIMS, I don't know, only above 25 and a half. Maybe it happens, maybe it fails again, but I want to chill on the HIMS for a while.
What about slot machines? LNW?
Oh yeah, this is the casino stock. Look, it's not for me. Chart looks good, above the prior cycle highs.
It tried, but it's looking like it's not going to get it done.
Yeah, it's not for me. But look, if it's above 90, you're safe here. Good looking chart. All right, Pat.
Last one, I think Val, and then that's pretty much it. COHR.
Val, I'm long. I'm very long. I own a ton of warrants. I've owned a ton of warrants. This is one of my vehicles of choice. This is one of my vehicles that my thesis was so long
Oh,
term
beautiful,
that I hung
beautiful chart.
on. So go get yourself some Valaris warrants. This one you could throw it in the same category as OII. If this candle here sticks today, this one will be making fresh cycle highs, also fresh all-time highs. This is also a leader within energy, and I think a great vehicle to play that eventual leg higher. And look, all these questions about energy, you could jump into the leaders now. You could jump into the Valarises and the OIIs, right, and get ready for that. However, what that does is it opens you up to being wrong, right? If the rest of the group isn't moving and confirming that action in the leaders, these patterns can fail. So
Yeah.
be aware of that. That is a risk if you're getting into some of these leaders that they revert lower and follow the rest of the group, or the rest of the group follows them higher. That's usually what we see in bull markets, but it can go either way for now. That would be the game that you're playing.
Man, what a clean chart. And you said they have warrants too, right?
So long the stock. Yeah. North of 80, the breakout's in. I held it because it was a long-term thesis. I got in probably back in early 2022. So I'm just sitting on my warrants.
And then Larry Washington Jr. wants to know if you're selling puts on the DraftKings.
No, look, I'm being selective where I'm selling puts, but I'm gonna go. I got crushed yesterday, guys. I lost huge. I was at the barber, and I'm like,
Oh,
I'm short puts in like Dell and AMD, and I'm sitting in the barber chair, and my alerts are going off on my phone. I can't.
you can't check. You got the bib
Oh,
on and all that.
oh, I got slayed on the AI sell-off yesterday. So I'm probably not going to sell any puts today. I do see the wicks. I see these wicks. I'm interested. I literally want to go and like resell puts on AMD right now. But I don't want to feel like I'm revenge trading. It's a whole, I got to go for a walk.
Yeah.
DraftKings,
Um,
DraftKings closer to those pivot lows, but like I want to see this one start working. before we put on, any new positions. DraftKings gotta do better for us out here.
Oh, any thoughts on Eric too? Looks like I missed that one.
Eric?
Yeah. Is that Ericsson? No, Eric.
Yeah, Ericsson. They make like VCRs still.
I think it was GPSs, but yeah.
Look, you got some sort of
CD
basic.
players, DVDs.
No, it's Blu-rays now, right? Blu-rays are the new one. So Ericsson, look, you got a little base shaping up. You can draw a couple lines here. You got a level here. Let's call it 637. You got a level at the late 2022 highs, right? Which price just reacted to right here at the July peak, 683, right? So get through this zone, and then a new uptrend is underway. Path of least resistance is higher, all that jazz. I think you play this right back up to those old all-time highs. It's just a double back to 14.
I like it. Well, Steve, I think we covered pretty much everything.
We have.
Yeah.
All right. This has been such a pleasure, as always. Live charting, taking your guys' requests, talking it out with my buddy Patrick here. Pat will be on the charts Tuesday. I don't know who will be accompanying you. We're going to leave it up to a surprise.
Sounds
Stock Market
good.
DVD. In the meantime, guys, join us tomorrow and every day of the week for the morning show, 8:30 Eastern Time to 10 o'clock Eastern Time, right here on Stock Market TV. Everybody enjoy the rest of your week. Thank you, as always, Pat.
Cheers.
Peace.